Welcome to Grant Accounting for Restricted and Unconditional Grants. In our previous video, we talked about how to classify every grant into one of four categories. These are the four categories on the extreme right that you see here. They include the unconditional restricted, unconditional unrestricted, conditional restricted, and conditional unrestricted. In this video, we're going to focus on unconditional and restricted grants. In the previous video, we covered unconditional unrestricted grants. We also talked about how to classify grants. So with that, let's dive right into it. Welcome to Restricted and Unconditional Grant Accounting. So GAAP rules stipulate that unconditional grants be recognized as revenue immediately. Now let's look at this example here. Let's say we put together a budget that has admin of $10 a month from January to December and fundraising of $10 a month from January to December, programs of $80 a month. The total expenditures are $100 a month. Now, if you look at that little code section there in ... that's for June, July, August, September, October, November, and December, culminating in the annual total on the extreme right. So in this example, if we go out there and we try to raise money for $1,200 to a fundraising program, and then we actually receive a grant of $1,200 in January, then what happens is when you look at the bottom of January, January will show a GAAP profit of $1,100. Then February will show a GAAP loss of $100. And at the end of the year, we'll have a net zero. So that's a good wash. Now, so a GAAP perspective, this is correct. But if you're management and you're looking at the March report and you're seeing that you've lost money in February and March, you might become concerned. So there is a difference between GAAP accounting and management accounting. In another video, we talk a little bit about a chart of accounts and how you could use that to possibly track some of this and help management comprehend these results more meaningfully. What happens if the money was received in December? You started your fundraising efforts in December and someone said, we'll give you the $1,200 and it's in December. Well, if you do that, your net income for December will be $1,200. Then for each month in the following year, you'll make a loss of $100 a month, netting a loss for the year of $1,200. But the preceding year, you made a profit of $1,200. So how do we account for unconditional grants? We recognize it immediately. And that immediately is what causes a matching issue in terms of GAAP reporting and management reporting. So just to reiterate, when a grant is awarded, that's when you need to record the entry. The question is, what is when a grant is awarded? Well, whether or not the funds are received. So that means that as soon as you get the grant letter saying that you've been awarded the $1,200, you're required to book the revenue whether or not the funds are received. So what does that mean in terms of accounting entries for restricted but unconditional grants? Well, in this example, we've received the $1,200 in January, or we've received the grant letter in January. And so we need to go ahead and book it. So the check arrives, and what entries are booked? Well, we debit the bank account, and that's in January, and we credit revenue restricted. Now, we haven't talked about what the restriction is. That's a topic for another video, but whatever the restrictions are, we tend to track these revenue amounts as restricted revenue. The reality is that from an accounting perspective, revenue is revenue, and it's going to roll down to your bottom line. However, the entry here for tracking purposes is debit bank and credit restricted revenue. But what if you get the letter and the check is not included? Well, in that case, you debit accounts receivable to 1200 and you credit revenue restricted 1200. And then when the money arrives, you debit bank and you credit the accounts receivable. Now, it's conceivable that as time passes, your restrictions are met. Well, when restrictions are met, we also move money from revenue restricted to revenue, which is the unrestricted bucket. And that's a tracking exercise. So now let's take a look. What happens if the money is awarded in December? Well, once again, we've got the situation where December will show a profit. Each month in the following year will show a loss. The cumulative loss for that year will be negative 1200. Although in total, considering December, that's a perfect wash. So what would the entries be? Well, first, if we receive the check, we debit the bank and we credit revenue restricted. What if the check is not included? Well, we debit accounts receivable 1200 and we'd credit revenue restricted 1200. And then as the money comes in, we debit the bank and credit accounts receivable. These are the entries, but you can already see that there's a mismatch between GAAP and management reporting and how management could easily be misled by looking at reports that are GAAP oriented. There are a number of ways you can manage this. Some people manage this with spreadsheets and separate management reporting. Some manage it within the accounting system that they have by setting up a chart of accounts in a particular way and handling special processes so reports look good. So looking at the chart of categorizations, we've got here the full chart, and we've looked today at unconditional restricted and how to record those entries. And then in the upcoming video, we'll also cover conditional unrestricted accounting. So in closing, I would say that it's worth noting that GAAP accounting is one thing, and not every nonprofit is required to comply with GAAP accounting. So that's the first thing you need to decide. Secondly, once you've made a decision on the methodology you're going to use, you'll need to decide to set up your chart of accounts to support that approach. So in another video, we'll talk about how we set up our chart of accounts to track everything within the core accounting system. I hope you like this video. Please post questions below and comment. Would appreciate your feedback. Thanks so much for watching.